Hello everybody, hope that you are very well and welcome to this evening's Contenders live stream. I want to start off by saying apologies that it wasn't yesterday. Obviously this is Thursday today, and this has happened once before where I had to delay it because my internet just goes dead. So everything is okay tonight. If there is any problems with the audio or stream quality, etc., just let me know. But I believe everything is absolutely fine now. We've actually had an upgrade, so should be better if anything. So yeah, I want to start off by saying hope that you're all well. Yeah, Thursday evening, obviously the 10th of September today, and what we have in store is for the next 3 weeks is part of the scalping strategy. So today is more sort of an introduction. So this is my plan for it. Today is like an introduction into the volume, how I use the volume chart, because this is very very unique to the scalping strategy in terms of the way that my template is set up. Then I want to be moving next week on to showing the template and going through it in detail. So today is like a introduction. Next week then is the in detail, the ins and outs of it. And then week number 3, I want to do like a live examples video where we just go through the whole hour, different trades like live, so you can actually see it working. Because it's, I think it's going to be one which is easier to see, to understand. So that's my plan for the next 3 weeks for you all. So I want to start off with the trade disclaimer as always, and that is make sure you pause and understand there's no financial advice in today's live stream. And with that said, we can start. So chart of the week I'm going to be starting with, and this is a different one because you'll have to let me know if you like this or not, but what I'm going to do is I'm going to start off with a blank chart for chart of the week. And it's actually undecided. I do not mind whether I do a stock, whether I do a commodity, whether I do Forex, or whether I do a cryptocurrency. I was thinking I could do this as a vote, or I could just pick one myself. But what I want to do is start off with a blank chart here and then work out the setup so you can see the technical analysis behind how I'm getting to those setups. So that's what I want to start off with first. If somebody wants to write an altcoin, be my guest or whatever. As I said, I'll do a stock. I'll do anything. I really don't care. I'll delete the chart from scratch and I'll build it up to build a setup, which I think should be a really good educational piece. Then I want to move on to the volume specifics of how I use this within my scalping strategy, and then ending obviously with the questions this evening. There may or may not be a lot of questions. We'll have to wait and see. I think tonight is well, I don't think there'll be so many questions, but I normally think that sometimes, and then there ends up being loads. But that is the plan of tonight's live stream, week number 1 of 3, as we go into the scalping strategy. So, yeah, I want to start off with a chart of the week, which is essentially like a trade of the week here, as I'm going to start off with a blank chart, delete everything on it, and then do the technical analysis. Okay. So we have 2 votes on Ethereum, 1 on ES, 1 on Tesla, another 1 on Ethereum, 1 on EOS, E4 EOS. Looks like the majority, I'm just going to say the majority, I would say, have voted Ethereum. There's a vote on ETH. 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 Yeah, I'll just do Ethereum then. Yeah. I'll do Ethereum tonight. Okay, that's fine for me. So I want to do is delete everything. I already know. Yeah, let's just do Ethereum, you know. That's fine. So what I want to do here is, as you've seen, I've just deleted everything on the chart. I want to start this from scratch, and then I want to show you the technical analysis and the process that we're going through to build up the chart. I think this might take a little bit longer than standard chart of the week, but do not worry. It's beneficial. I just show you there's a lot more comments of Ethereum. I think everybody wanted safe to say a lot of people wanted ETH. So let's do ETH. Tesla was second place. Maybe I can do that in the Champions live stream. I can do Ethereum, Tesla in the Champions live stream. Let's start here with Ethereum. I'm not going to commentate too much because I actually want to. There's no need for me to commentate really. I can just do this. Let's go. Marking up the monthly levels first. Sorry, absolutely noob mistake. I'm not even on the monthly chart. There we go. As we know, this is a really big monthly level. Hmm. I always start my charts by marking out monthly and weeklies. You'll probably know that. As you'll know, I absolutely love the speed resistance fan. That's such an overpowered tool. Like literally, it's so good. Okay, what I'm going to do is to make this a little bit more simpler. I'm going to say this is all part of a correction. And now we've moved on to, let's just say, an impulsive part of the correction. I'm going to say this is different than what's going on in the past. Okay. So we draw the speed fan, and we would know that we're going to be looking for our first level on the speed fan. And then what we can do is channel. Obviously, what I would be doing generally is putting all of this into folders. Really quick, just because I need to hide loads of stuff. Yeah, I think that's a really nice channel. Midpoints, midpoints, resistance, or resistance. Wow, look at that. That's why you gotta love the speed fan. um, Bouncing off the 382 with a speed fan there. As you know, I love Fibonacci. So Ethereum running into confluence of 382, 0.5 monthly. It looks like your original channel. Low, high, low, break, back into the mid, break, back into the mid. Lots of grinding along the top before a breakout. I'm just going to, this is, I wouldn't call this correct, but I'm just going to look for some form of targets off of this. So that's really, really, really nice when you see that. If you do an expansion of the first impulse to the end of that secondary correction, and you look for the one-to-one, and you see the respect one-to-one caused a literally to the wicks before a 12% pullback. And then you verify this on the 1.618. You hit the 1.618 again to the absolute wicks, and then that caused a 22% pullback to these lows, which, as you saw, was the speed fan 382. That's pretty perfect. Taking liquidity on the 382 speed fan, hit the 382 speed fan to the absolute pretty accurate. Up 14% to bounce off of the monthly resistance. That is so technical. Really, really, really amazing. That is so amazing. As you can see, it even went off the 382 to 25. So it's literally gone from speed fan to speed fan. And this is really cool. You see that one-to-one that we saw? That one-to-one extension before it was formed. Look at the 2.5 there. That is like that is just really, really cool. That is amazing. Okay. Really, really is. Oh my. Okay, so this is a little tip. You see, like, this is where right. So you see, this is where it's really sideways, and then it gets impulsive on this candle. So take your fib from where it got really impulsive to that high, and then you can see here it also come into the CC of impulse starting to here. This is sideways price action. Impulse starts, beginning of the impulse to the end of the impulse. You come down to the 382 speed fan, the CC of that impulse, the liquidity grab, bounce straight up to monthly. Yeah, that's cool. It's really, really, really cool. You got two options. I think I was saying this on Sunday's live stream for the champions, I think. Where you either got this triangle going on, you break up out of the triangle, but this is kind of like going to go on like this, and then you break up. Option number 1, and that would be that the low is in, that this low doesn't get broken. So that would be one option, or the second option is this is literally an A, B, and you come down for the C. Okay, where you could be looking at the CC, the one-to-one extension, back test of this channel. So there's 2 options, and I think it's going to, let's be honest, Bitcoin likely will play a big role on it. But you could be looking at this. See that the risk reward is, you're not going to be taking that big of a stop loss. But you'd be looking at it. And again, the Elliott wave count you kind of just ignore for this, but got quite a setup on it. Looking down for a CC, one-to-one extension weekly. Again, I'm not going to be pre-saying anything down here, let's be honest, but that would be a potential trade. Again, you're not going to be really up to there all the way, but at least back up to that monthly. Or the secondary option is that you've put actually in a low here, and this goes on to form a bigger triangle, which is obviously the much more bullish option, and you start to break out. Really, it's pretty easy to know if that is the case, because if you start to reclaim that weekly, well, then it would seem very likely that that is the low. Whereas if you do start to reject off that one-to-one extension or the monthly where you are here, and it starts to actually break down like this, okay, never reclaims the weekly, well, then it's likely that this is all part of a B down for the C. Again, for the Elliott waves, you need a bit more time to put into it. But that is what I would envision. Point of control. Okay, so there's your confluence, where this monthly, the old range value area high sits on that monthly. Oh, wow. And then that old range high volume node, you see how that perfectly sat on that wick? There was so much confluence, let's be honest, on that wick. So much confluence. Yeah, that's pretty amazing. I didn't trade that, by the way. I missed that, but yeah, that would have been amazing confluence. Just trying to see if I can see any harmonics. I need something with more history. It's really hard with on this Binance chart. Okay. The time of the impulse. Oh yeah, of course the volume's going to suck on this. It's going to be rubbish on this exchange. Yeah, that's more like it. Oh, that's really pretty hard to decipher whether this has still got that next rise because it looks pretty corrective in my opinion, as if this isn't a correction that's finished. So you could still do something like this. Um, that's highly dependent on Bitcoin. I'm not sure the best exchange for that data, whether it is Poloniex or not. because it obviously looks so much better on Binance. But it just sucks because I don't have anything past here. So but there you go. But I'd say that locally, yeah, I think you got that triangle option, which one would say feels the most likely. So you got the triangle option. Obviously, if you start to break above the weekly, then that really, one would say, confirms that triangle. Where I still think then you got the next, you got that next region of like at least to that week, you got 50% rise if it can reclaim the weekly. And if it falls down, I think you're looking into that region of the CC, the 1-to-1, retest of the channel. So it's kind of like, obviously the triangle is much more bullish, and the other option is a little bit more bearish because it would see another 30% drawdown. So I think this very much plays on Bitcoin's stance. Yeah. I was wondering where everything had gone. Really depends on the Bitcoin stance. For Ethereum on the bigger, we're talking about big macro term picture. I would say the break of this does play a pretty decisive factor. But yeah, there you go. You'll have to let me know whether you enjoyed that on Ethereum or whether you prefer me to do the normal stuff. I thought I might try this tonight of taking the chart from scratch, building it up with some tools. I think, as you saw there, the beauty of the Fibonacci speed fan. Wow, the way that it caught that from the 382 to the 25 to the monthly, that was extremely technical. Yeah, really is amazing. There we go. So I'm going to move on to what we are going to be covering tonight. Hope you've enjoyed the starting chart of the week. Different, a little bit different than normal, but hope it was valuable. So let's begin. So volume Pacifics. And the volume Pacifics that I'm going to be going through tonight may not make sense to you until we do get to next week. I just want to put that out there. This is something new that we're covering tonight. I don't think it's been spoken about before. There's very little information on it. And I just want to let you know that you may want to save some of your questions until next week, simply for the fact I may not answer some of the questions tonight because I know what I'm going to be doing. I know what I'm talking about next week, sort of thing. So I just want to put that in there for some of this to make sense. It will make more sense next week when we actually get to the template and more actual into, going into the strategy. I want to be starting here with some little tips that I got for it. And this is when we look at the HLs, and this is for identifying liquidity in the market. And this is something that's so amazingly helpful when you can recognize whether you're trading in high liquidity and low liquidity. Well, let me ask you this first. Oops. Oh no, I went the wrong way. Let me ask you this, because it would be interesting to see if anybody knows, because I don't think they do. How would you recognize, are you in a high liquidity trading environment today, or are you in a low liquidity trading environment today? And the strategy that you're trading or the technical analysis that you're looking at would actually differ depending on if you're high liquidity or low liquidity. So think about that for a second. Do you know how to identify the difference? By the end of tonight's stream, you will. So I'll tell you. Basically, what we're looking at is the H&Ls for identifying whether, and this is obviously when I'm going through my volume charts, whether we are in a high liquidity or low liquidity, the time that it's being printed in, obviously, and the high and low of the candles. So the way that I would really identify this, and I call this scalping strategy, but it's actually more like day trading strategy, because from it, I would take maybe, say, like 5 trades a day. So it's not a strategy where you take 100 trades. No, it's not that. It's not like that Bollinger Band strategy where you could trade 100 trades a day, 200 trades a day. This is more like 5 trades a day, but they're like really nice trades. I guess it's not scalping per se, it's more day trading, but nevertheless, that's irrelevant. But anyway, what we're going to be looking for in this is specifically when price is breaking through a level. So you're getting a breakout trade or a fading trade. Fading means to actually counter the breakout, which we're generally doing more times than not. And what we're going to be looking for upon looking for a fade is if price is breaking through a key level of the day. This could be an internal level such as the point of control, value area lows, value area highs, a monthly level, weekly levels, your Fibonacci 618 CCs. Okay, it's not just like a high or a low. Okay, but what we're going to be, that's obviously best on the highs and the lows, but you do get the intraday setups as well. But what you're looking for upon, let's just say the highs and the lows, is when price is breaking through that high or low, and the high and lows of those candles are larger than average, it is likely to be a fake out. So here I have an example. As you can see here, this is in a low liquidity environment because you see how big the candles are. And obviously, you can refer back to Mike's live stream that he done on the volume. This is, I've got these set to 5 million candles. So what can we tell? This is the massive advantage of trading with volume candles over time frame candles. We, as Mike has said previously, firstly, it ignores all the noise. We're only getting a candle printed when a candle needs to be printed. And also it's helping us recognize the strength and the momentum of a move, as well as the liquidity in the market. So what you can see here, this was a swing failure pattern / liquidity run. You can tell that because of the many liquidations that are occurring here, as you can tell from the many circles. So you are swing failuring the lows, and you're actually baiting in a lot of liquidity on this. Generally, this is going to be through liquidations, as you can see the open interest declining. And then what you get is a really big buyback, okay? And this is a classic swing failure pattern that goes into like a lower high and then breaks down once more. And when I've said that many times, I've said this looks like a swing failure pattern that's going to make a higher low and break up, or this is a swing failure pattern that's going to make a lower high and break back down. And this is what you're looking for. You're looking for firstly the liquidation run and then the buyback on only a few candles, and they're very big candles. It's showing you lack of liquidity, lack of interest in the buyback. And as you can see, what happens is the liquidation run, and then 1, 2, 3, 4 candles that on the way down you had 1, 2, well, let's just say 20 candles. So 20 candles on the way down, 4 on the way up. That is highlighting massive liquidity run. Okay, all you then done is retake the stops of the high, so last region's highs, run those stops once more, and then you come down and you retest the level again on very high liquidity because you're building up lots and lots of small candles. Down at the low, you're building up lots of small candles. So you can see this, large candles with many liquidations as a swing failure pattern occurs, or a liquidation run. Price quickly bought up on low liquidity. We can tell it's low liquidity because, again, we're on the volume chart here. We are on the volume chart, and the volume charts are printing very large candles. So this is 5 million from here to here. That is 20 million. And on the way down, that's took, a few hundred million. Okay, I hope that makes sense. So as you can see, then, it's bought up on high liquidity. It then comes down and retests that point of, this is where you can get into order block theory. I know I haven't covered order blocks, but you can view this as this was your, order block. That was your last move to the downside before the up, okay, or your last up move before to the down. You retest that, okay, you retest that region. As you can see, the liquidity is much better down here with larger candles on the buyback, but it instantly brought back down, okay. It's just building up what's known as like a base. So this is building more of a base. It's really trying to, well, it's obviously being bought up on high liquidity, and this is generally not something that you're going to be wanting to follow. If something's, gone down in a few hundred million and it's bought up in 4 candles, shows you that really there's not much actual, well, it shows you thin books, doesn't it? Okay, and if the books are really thin, you don't want to follow that move. You look to fade that move. You think it's a swing failure pattern that's going to fail. Obviously, in this example, it does not fail totally, but it does bring you back to the point of origin. So obviously, you come back to the point of origin of the move, and then, well, I haven't got all the data on this, but obviously, you start to, ultimately, it looks like you form a range. Okay, but basically, what you're looking for is high or low liquidity moves. So the size of those candles as you come down to or through big reference points. So the inverse of this is obviously lots of small HL candles equals high liquidity. So if price is hitting a key level, and this can be any level, and the higher lows are smaller than average, but the CVD is breaking up, it shows bigger traders absorbing buy or sell orders, obviously, depending on where it's located. This is a really, really, really nice example. And this is an example of a really high liquidity environment. So previously we were seeing really big volume candles. Now we're seeing very small volume candles. So this is telling us straight away, without having to look at volume or anything, we're in a high liquidity environment right now because the candles are really compact. So what we can see is lots and lots of small candles, okay, being printed very quickly. And what you can see is lots of small candles going into a high time frame resistance. That's 10,500. As we know, this is still a high time. Today's high was 10,488. So it's still a high time frame resistance. Anyway, lots of small candles going into a high time frame resistance. Price forms bearish CVD divergence and then sells off. So what you can see, and this is a bonus for you CVD lovers out there, you want to trade the CVD divergences in high liquidity environments. Okay, so you do not want to. This is why how I'm very good at saying here's a good CVD divergence, whereas many people many people will identify CVD divergence and it doesn't play out, and then they wonder how come Daniel could recognize these good CVD divergences and other times I recognize them, or like speaking as themselves, like I'm looking at this and it never works out. Well, the difference is you have to be looking at CVD divergences in high liquidity environments. So you're looking at compact trades like this, and again on the volume chart where you build up your first level on such small candles, and that's showing you that there's a lot of volume going into this and price is not advancing sufficiently for that volume. So it's showing you that the larger traders, if this is a 5 million volume chart, they're absorbing several 100 million as it's going into that high. Price is not advancing as one would expect, and then when you retest that same level, okay, and as you can see, open interest building, so that is showing you a lot of new longs are opening into this level. Then you get the bearish CVD divergences on top of that, and then the sell-off occurs. And as you can see, the sell-off is on, to be honest, lots of small candles. This is a sustained sell-off on small candles. That is then showing you the bigger trader is then getting out of his position in a sustained manner. It's not like a liquidation run, but there is actually acceptance going down through these levels. Okay, so acceptance is a sign of lots of transactions, lots of volume going through the level. People are accepting, okay, this is actually time to go down, sort of thing. So recognizing these liquidity pools, recognizing CVD divergence within those high liquidity pools, that is how you take the best day trades. You know whether to fade this, so you know whether to wait for a high to be taken and look to fade it, or you know to look for CVD divergences. It's like obviously really helpful. So on top of this, what you're going to be looking for is the trade count, and specifically low trade counts. Okay. Tell I'm trying to take more breaks for my throat. So you're going to be looking for the low trade counts. Why are you looking for low trade counts? Primarily because I've put here exchange, but we could change the word exchange for high volume trader, a large player in the market. So if you can see, let's say you got 10 5 million candles. 9 of those 5 million candles are built up with, let's say 8 of those 5 million candles are built up with 1,000 trades. And then you have 2 5 million candles in a row that are built with 1 trade, let's say, or 2 trades. That's showing you somebody has then just, executed 5 million contracts twice, or a 10 million contract short position, let's say. And, if somebody's executing such large volume, you can generally say, okay, if this is starting to be a trend, that a higher term time frame trader, be it an exchange, be it whoever, it's irrelevant, but the higher term, the larger player here has made a decision. And then what are you doing? Like we have been doing in the past, you're following the footprints. What you want to see is the footprints of the higher term front, the larger traders in the market, and you're generally going to be following those larger traders. If you can get, a glimpse of what an exchange is trying to push on people, which is generally going to be reckoning the majority, you want to be following what they're doing. You don't want to be following the herd, but you want to be following where those quick trades are getting in on very low trade counts. That's how you recognize it. Okay, obviously where you do on exo charts, for example. So as you can see here, price rises on a very low trade count. As you can see, the trade count is down here. And what that's highlighting to you is that if price is rising quickly on a low trade count, it's showing you, well, obviously if you're moving up quickly on a volume chart and there's not many transactions going into that, it shows you bigger players are obviously putting their money into the market. This is being filled up of several million at a time trades. Whereas if something's taking 10,000 trades, it's obviously loads and loads of, $1-2 trades sort of thing. You understand? So recognizing, the trade count within inside of this is another integral part really of it. And this is another example where we can see price rises on large candles, and then it goes into a sideways period. Okay, you get the bearish CVD divergences, and then you sell off once more on a low trade count. So it's looking at the first large candles into a level, low liquidity. You do not get the head fake on this, but nevertheless you build up bearish CVD divergences, and then you get to sell off once again on a, this wasn't a perfect example, but more for the theory for you. If you start to then sell off on a low trade count, then you can generally say, well, that person that was absorbing all of those buy orders here are then, they've obviously decided the direction of the market. And then it's, as it gets pushed in that direction, you want to hop onto that. Instead of starting to try and buy the dips, you want to actually be looking to short every rise that occurs, for example. So then, see, there's going to be quite a lot of questions I can foresee. So basically what you are going to be looking at inside of this is high or low liquidity. And this is obviously it's pretty easy to get your head around at first, but to actually master it, does take a little bit of time, because what you're going to be wanting to do is recognize that high or low liquidity and then understand that the technical analysis that you're using within inside that environment is going to be significantly different. Whether you are, to recognize, just have this knowledge and know whether you're going to be looking to fade a move or join a move. That is like such, you've just got a massive advantage on the majority of the market, because the majority of the market are not going to understand or even know about this. So when you are able to recognize, okay, I'm going to start looking to fade this move, or I'm going to start looking to join this move, well, obviously that gives you a big advantage as a, you could use this for swing trading, but for day trades, that is just, it's one of those days where you can take one trade a day and, it just pays. So, that's what you have going on there. So then I will say, does anybody have any questions about what I've gone through tonight? That's recognizing high and low liquidity environments. And then whether you are then looking to fade or join onto those moves, as well as you can start to combine the trade count. The trade count is it was really difficult for me to add that one in this. I was debating leaving it till next week because it kind of, I need to go in more detail really, but nevertheless, does anybody have any questions on that theory? Again, next week we are going to be going into more, diving into it, I suppose. And then week number 3 is where I go through all the examples. It's one of those that the examples I think are going to be the easiest way, because you can actually see me using it. But yeah, there you go. So let's see what we have. So what we have here, okay, so this is referring back to the start. Are yearly levels relevant on Bitcoin and Ethereum? Why don't you mark them? Well, so this is the thing. You could go back and as you can see, I do have a yearly chart, sorry, and like a quarterly, 3-month chart. And you could say they are relevant, but if you go onto the Ethereum BTC chart, we load up the 1 year. I mean, we got one level which is down at the lows. Like it's just well, obviously I'm on the Binance chart here, but for me it's just the likelihood of me ever going to, like, on cryptocurrency, of me referring to a yearly chart is once in a blue moon. I don't know, not very often I'm going to be really referring to a yearly chart. If I'm honest with you, yeah, I can't remember really that. I don't really check yearly charts on cryptocurrency. Obviously, it's pretty helpful on the stock market depending on conditions. But for crypto, yeah, can't really say I refer to the yearly chart. 3-month is a little bit more acceptable, but yeah, yearly I don't really touch. We also have you said you trade alt USD pairs, but chart BTC pairs. What is the easiest way to compare price of USDs? Yeah, you have to remember, I am primarily now a Bitcoin trader. I rarely trade altcoins anymore. To be honest with you, I very rarely trade altcoins. I just have so much more enjoyment, and I don't know. I personally just rarely touch the altcoins now. So the way I trade my alts, obviously because the way the altcoins move, it's based off of the spot. So this is obviously a spot chart. So you have to remember all these derivatives, the exchange, they're moving because of the spot price. So it only makes sense, in my opinion, the way I trade, even when I'm trading altcoins regularly, I would still only refer to the spot price of the asset, and I'd be trading off of that. So that's the reason why I chart Bitcoin pair here, because the USD pair is only going to be moving by what happens on this pair. Also, the USD pair is more influenced by Bitcoin, whereas I want to know, okay, if Ethereum is outpacing Bitcoin, well, then I want to trade long on Ethereum. But if Bitcoin's outpacing Bitcoin, if Ethereum is outpacing Bitcoin, I want to trade Ethereum. And if Bitcoin is outpacing Ethereum, then I want to trade Bitcoin. So having this chart, like, I do not understand why people sometimes trade, for example, if somebody right now is trading EOS USD, it literally makes no sense. If you're long EOS USD right now, it's like, why? Why would you trade EOS USD right now when you would make more money in Bitcoin? It doesn't make sense. So you have to look at what the underlying asset is doing to spot price. Okay, like, I need to do like a live stream on this, because so many people always ask the same question, and I think it's just because they have no, well, obviously they don't know. Yeah. So basically, that's the reason I want to look at what the spot price is doing. Looks like a stream I'm going to watch 5 times. Yes, to get the trade count, you can go across to Exo charts, load up anything, and then it's under the footprint statistic bars, and then you're going to add, and you're going to add in trades, and you can just add in trade count. You can obviously add in so many things on this now, but yeah, it's under trade count. As you can see there, trade count. That's obviously transactions, buy and sells. When will the video be on the VitChampions website? Takes about an hour to process, so you can expect it in about an hour, I would imagine, more or less. Maybe we could go back in the charts you showed us and point to the entries at exit points. Oh, yeah. I honestly, that if I'm totally honest, these examples, I cannot even remember where they were taken from. The date where these were taken from, I cannot tell you. Those were examples taken, but I cannot remember. I'll be honest, I cannot remember the day or time those were taken. Period. Honestly, I just cannot remember that. No, apparently I need to fix some of the settings on the mic. Sorry. No, I don't want to share the temp. There is so many people have done the template already. They've kind of seen it and made it, but I want to share my template next week. Just yeah, that's kind of been my plan for the whole time of this. So I'm gonna share the template next week, just because. Yeah, that's what. Yeah, I'm just gonna stick with it. So, this is solid gold. Good. Might as well just put this on this screen so you can read it. Yeah, so I'll share the template next week, 100%. I really feel it's in the same streets. Yeah, that's what I recommend. Watch it multiple times over, understand the theory. Is this strategy going to be shown consecutively for the next 3 Wednesday streams? Well, for the next 2. For the next week, I'm going over the strategy itself. Then the week after that is going to be examples, like going through it live. Is this? Yes, I only use this in volume charts. So I would only ever use this in a volume chart. So for instance, we come across to like a 10 million chart. I myself only use it in volume charts. Oops. I'll share the template next week. We'd be very grateful to get an update with it. Yeah, I guess I can really sort of, because I have changed a lot of my templates. I know that. I can release them all next week again. That's absolutely fine. I need to, yeah, I do know that I have changed them recently. I literally will, when my alert goes off on the BTC pair, that's when I'll enter the USD pair. It's a very swing traders perspective on them. Okay, it's 100% swing trades. Like I do not scalp altcoins. Like very and nowadays I don't scalp altcoins, so it's a very big swing traders perspective under the spot underlying asset. Well, yeah, and that kind of answers this question. Obviously, this is from a swing trader's perspective, so the exact entry is going to be very a big region. Like I'm not so bothered getting a perfect entry. If I'm planning to hold that for a swing trade, then I'm obviously I'm gonna have. You have to remember, I'm trading Bitcoin predominantly, so I'm spending 10 hours a day literally trading Bitcoin. So I'm only then going to take that underlying spot pair if I'm trading the USD pair, if I know Bitcoin is going to be doing what I want the altcoin spot to be doing. So it's a little bit more complex, I suppose, my strategy here for the altcoins. And it's 100% not for everybody. I'm not even saying people should copy the way that I trade alts because you probably will get wrecked. Like my strategy is pretty specific to me when it comes to the altcoins, and I really don't even recommend people to try and copy that, to be honest. You're probably better off just charting the USD pair and trading the USD pair, unless you understand why I'm doing that. Then it kind of makes no sense. I would like to know if it's possible to add the presentation. Oh, right. That's something we'll have to think about. That's been asked before, and I do know it would definitely be useful. I need to work out we can add that. Like I'm absolutely fine sharing the presentation. I just need to work out with the web guy how easy it is to upload. We got yeah. I don't see there should be a massive problem. I was going through a period of adding them all in the contenders chats, and then I just forgot about it. But we can resume that. That's fine. You also use this when it comes to swing trades. I feel like it could be right, or am I totally wrong? So I do not really use this, if I'm honest, when it comes to swing trade. I use it on day trading only. So I only ever use that day trading. And I'm not saying you couldn't use this swing trading. Like you could, but I don't. Thank you, Daniel. You're doing great work. Thank you. I appreciate that. Thoughts on Bitcoin? We can end with Bitcoin here. Yeah, I definitely, I know there's been many people asking for the presentations in the past, and we did go through it at a stage of uploading them, but then I just forgot about. I'm a really forgetful person, to be honest. So let's go through Bitcoin then. Obviously it's seen a little bit of a drop at the moment. I haven't traded Bitcoin in 2 days. Obviously that's why we're doing this stream today on a Thursday, because my internet's been dead, period. I haven't done anything on the Bitcoin chart recently. Well, for the last 2 days. So I'm pretty happy that it's gone sideways. It's really funny. The day that my internet died, I was in a scalp which was going to be held for literally like 5 minutes, and it was a long. And I showed you was showing the order, and I was like, oh my god, I'm like stuck in this long position. So I was really, 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 really happy that it didn't dump. I would have been literally so mad, because where I live, also the 3G is awful. So I couldn't do anything. It was really bad. Anyway. Yeah, Bitcoin. Well, I think Bitcoin's absolutely fine. It's obviously pulling back a bit here, but in the ES is tanking. So, I've been updating you today on all my trades. I'm actually in zero position right now. I'm not in a short or a long. I just closed out everything when I got my internet back, basically, because I hadn't spent enough time to really see what was going on. So I'm in zero position at the moment. Not in a long or a short. So what we can see here, well, the ES is pulling back pretty hard, down 2%. Gold pulling back. So Bitcoin, have a guess, it's probably going to pull back and lose support, I would have thought. I remember from the last time I checked, 10,200 still really, really, really important support. Obviously, Bitcoin here a bit more locally, high, higher, low, higher, high, higher, low, higher, high, higher, low, higher, high. This could still be a higher low. So really, until you break 10,200, well, it's obvious too late. You don't want to short you don't want to short now, do you? You're going to at least need to wait for some sort of a bounce. Obviously, we had been seeing this as some sort of range where we had really, it's cleaner on this, doesn't it? So yeah, this is what we've been had really nice, where we had the original. Okay, we had the original bearish Gartley that played out, and then you got the rise of the bearish Gartley, and it's almost as if the range that you had off of that. So you had this kind of highs period, and then the lows. You've got this really nice range that's still continuing on here. Low, high, low, high, back up to the highs. So ultimately, you could still expect this to range all the way back down to the lows. I mean, you got to trade the range till it breaks. Okay, so you do kind of have this high, 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 high. So, you could still expect this to range down to the lows, but I mean, I definitely wouldn't short where it is now, just because of the simple fact this is high, high, low, high, high, low, high, high, low, high. And until it breaks that, you can expect this, literally at the moment, it's still a higher low, isn't it? So, I definitely wouldn't enter a short right now. And I would be myself a bit more cautious on the longs, simply for the fact that the stock market is tanking, and that's generally not what you want to see. Yeah, so you got a bit of conflicting signs. I myself I'm in zero trade, so I would be much more interested in myself. I'm more interested in a short, but whether I can get that short up at higher levels, and as long as this structure here continues, I can still look for 10,600, 10,650-ish, as long as we get this to continue. I can work my way up to my preferred region of shorting, which is 10,600 to 10,800, this $200 region where I would love a short. And as long as this continues up like this, there's no reason at the moment why I cannot get that. If we start to lose 10,200, I definitely don't think I get that short. And, I'd have to look trading off the point of control of the range. And, yeah, that just happens when you miss out the good trades. Yeah, that's my opinion on Bitcoin, really. I need to do some more analysis. I've not done anything on it on 2 days, but that's my analysis of a quick 5-minute update for you. So yeah, make sure the stock market doesn't lose that low. That would be pretty bad. But as long as it doesn't lose that low that was made, then it's still okay. You can envision Bitcoin. I'm really would like to see 10,600, 10,800, because I think it would offer a really, really, really good trade. Be that a breakout trade back to 11.5k, or be a really good short. Like, I would love 10,800 on Bitcoin, 10,650. I would love that. Do I get it? Well, I don't know at the moment. I don't know whether I get that. All I know is I'll take a trade if we get it. But As long as this market structure holds, I'll ride it up in spot. Okay, I'm not going to leverage at the moment, but I could ride this up in spot a bit higher. But if we lose 10,200, I think I'll have to be much more aggressive on a short trade, because I think we get back down to 10k again. That's a $200 move I wouldn't want to miss, especially because I'll be writing it down in spot, which I don't want to do. So yeah, that's a really quick update on Bitcoin. Obviously, the next contender stream, I will go through the strategy itself. I'll share the template. And then in 2 videos time, that's when we'll do all the live examples, just going through the chart and so you fully understand. Again, it's one of those that's so much easier to that's easier to just view me do it than explain it, I think, really. So summary, the key points of tonight. Candle size shows liquidity. And this again is candle size using volume charts, which is only available on Atos, Sierra, Trading Technologies, Exo charts. It's not available on TradingView. CVD, best with high liquidity environments. So when you get those high liquidity trades, the CVD is like just number one. It's really, really, really overpowered. You saw I went through that period with literally a 100% win rate calling that. So it's just so overpowered. And, you want to be looking to fade the low liquidity moves. Okay, so when you come into those low liquidity environments, those are moves that you look to fade, that you do expect literally to fade. So trading with volume or the liquidity or the bigger market player just makes trading easier, period. Like what you want to do is follow the footprints of the larger traders and follow the larger traders. Don't get involved with the retail, but get involved with the bigger players. Okay, and it's not just blindly following them, because obviously someone could have 10 million and they waste their money, and that happens obviously. But you obviously do want to use this with a confluence. It's not just randomly see a low trade count order and follow it blindly. It has to be in the right context. Please don't forget that. The context is obviously so important. You want to see the build up of, CVD, for example, okay, coming into an important level. It's not just randomly see this in the day at a random place and start trading with it. No, that's going to lose you money. Context, 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 context. Okay. And that's going on to next week. So, yeah, there you go. That is tonight's live stream. We have gone through the high and low volume liquidity regions, the differences that you do in those trades. I have then explained how I'm using that. Next week, we go on to the template itself and how I then actually trade with that. Week number 3, we go through the live examples. And I also done a little bit of a different chart a week tonight. So you'll have to give me feedback whether you like that or not. I hope that you have enjoyed this one. As always, I'll be around in the chat. Literally, again, I'm around like 10 hours a day. So I'll be around after this stream ends in the Discord, should you have any extra questions, etc. And if not, I'll catch you next week, where we will be going through the template itself for the scalping strategy / day trading strategy. And I will share every other template I got on ExoChart. So that's about 10 templates. So yeah, there you go, everybody. Hope you've enjoyed tonight's live stream. I want to thank you once more, and I'll catch you in the chat. Cheers, everybody. Thank you, and goodbye. Bye.